Good afternoon, everyone. This is Roman Shersher with your #1 online resource for buying property with your weekly update. Today is the 15th of January, 2021. We got a lot to go over today. I'm really excited about the content that we're going to share. Please, as always, remember that if you like the video, please hit the like button at the bottom. It keeps reminding me to create this valuable content and videos just like this. Really appreciate you guys. So current projects, we have a condo that will be coming live in Sherman Oaks. We're closing on another condo in North Hollywood. Really long transaction. I got a renovation, a rehab that I'm completing in Jacksonville, Florida next week. This one, surprisingly, we came in under time. We were supposed to be done on February 4th with the renovation. We kicked butt even with the and we're actually going to be ready with it next week. Super excited. I can count on one or two handfuls of times when I've come in under time or under budget. It virtually never happens. So very excited about that. We got some more properties that we're talking to sellers in Jacksonville. Should have them under contract soon. Jacksonville is a great place for rentals. It's a great place for cash flow. If you're interested in getting involved and owning real estate for cash flow purposes, it's very difficult to have positive cash flow in Southern California and California in general. That's why most of the people invest out of state in cities like Las Vegas, in Arizona. There's a lot of outside ownership, out of state ownership. Texas is huge, and of course Florida. All right, let's talk about our content. We got in the December home sales numbers, and they're really, really great. Last week when I gave a weekly update, I was looking for this information, but unfortunately it wasn't available just yet. And so December was absolutely on fire in California. Home sales ticked up 0.2% from November. They were at 508,820 transactions. We were up 28% from a year prior. And for those of you that don't follow me on a weekly basis, this is incredible because between March and May, we were pretty much dead. So not only did we recover all of the lost transactions during those months, we surpassed the year prior by 28% with, keep in mind, with half of the inventory. This just tells you how on fire we were last year. After dipping below $700,000 as our median price in California the previous month, our prices went up significantly in the last month. It rose 2.7% month to month. In many year in the past, 2.7% was a really good annual increase in prices. Now our now our median price in California is $717,930 in December, up from $698 in November, and median prices last year in the state of California went up by 16.8%. December to December. That's a staggering jump year over year for real estate. You might see that kind of increase in individual stock prices, even stock indexes. You don't see it in real estate. That it would take 3 to 4 years to get that type of a price gain. Our unsold inventory dropped to 1.3 months. A normal flat market is about 3 months of inventory. We're at 1.3 months, which tells you how low we are in the amount available inventory. It matches our record low inventory from 2004. Active listings fell 47% from last year. We're at 47% less inventory on the market, but we're beating the amount of sales by 28% from a year ago. Our price to list ratio was 100.1%. That means that whatever the average home lists for, it's selling above. This is commensurate with the multiple offer situation, the competitive offers that we're seeing on almost all of our properties that are put on the market at at market rates. There are a lot of people that are trying to take advantage of this market and increasing and putting their prices up 10% above market. Those, of course, are not selling 10% above market, but some are, surprisingly. And in terms of the resort communities, buying interests still remain tremendously high. Mammoth Lakes saw the biggest sales increase in December. Mammoth Lakes sold 117% more properties in December of last year than they did in 2019. It's followed by Lake Arrowhead, 78.6%, Big Bear, 54%, and South Lake Tahoe, 31.7%. For the year 2020, sales increased 92% in Big Bear, 51% in Lake Arrowhead, 49.5% in Lake Tahoe, and 37.5% in Mammoth. Okay, for the year, not December to December. All right. So what's going on with those prices? As you can see here, our median sold prices increased significantly. Our California single-family home, 16.8%. But let's look locally. Southern California, the southern region of California, increased 13% year over year in terms of prices. Let's look at some of our local Southern California markets. In LA, prices increased 10.6%. Our new median price home in LA, Los Angeles County, is $709,000. Orange County, $950,000. We increased 13.1%. Riverside saw a tremendous jump. So did San Bernardino, 16.3% and 18.3%, respectively, in terms of price over year-over-year inventory. Sorry, year-over-year price increases. Okay, and in terms of month-to-month, increases were significant. In Riverside County, we sold a lot of properties. Okay. Last thing I want to show you is our unsold inventory. Right now in LA County, we're selling homes at 9 days on market. Staggering. San Diego, that's even less, 7 days on market. Okay. Orange, San Bernardino, 10 days on market. Riverside, 11 days on market. It's going so fast. So how do we slow down this market? And more importantly, if you're a buyer in this market, how can you go ahead and how can we increase the amount of properties available so you're not having to compete amongst 35 offers? We submitted an offer on a property, a fixer in Pasadena. This was a very nice street. We submitted an offer in Pasadena. There were 35 offers for this home. 35. It was listed at $1.2 million. The winning bid, we're still waiting to hear, is going to be around $1.5 million. This is how aggressive this market is here in Southern California. So what's going to increase the amount of inventory? Well, 1/3 of home buyers would relocate if remote work becomes permanent, and 1/3 already have. Redfin did a survey amongst 1,400 people, and this survey just came in, and many consumers and buyers are agreeing with the fact that they don't mind moving and they would like to move if they're able to work remotely. That work is what's keeping them here, and the pandemic is allowing a lot of people to migrate in terms of where they're working. And so we're seeing that 67% of people who would want to move if they could work would. And so this may actually increase the amount of inventory and I'm seeing a lot of people right now, a lot of companies are getting more comfortable with the idea of their workers remotely working. And so this could increase that significantly if we're able to. This would increase the amount of inventory on the market, which could make it a little bit of a less aggressive market. So now, where are these people moving, and where would they move if they were to move? A new study by United Van Lines, which is a moving company. I love these studies. United Van Lines and also U-Haul. U-Haul puts out a study, and you could see really what's going on in terms of migration. Migration has been very very significant over the past year. Pandemic has driven migration more than it would traditionally. But where are these people going? What you're seeing here is a map, a legend of where people are leaving and where they're going. The yellow states are the ones where they're leaving the most. So for example, California, we had outbound migration, total outbound migration of 58.7% and inbound migration of 41.3%. So we have 17% more people coming out, leaving California than going into it. And you can see here the reasons for it. Retirement is causing a lot of people to leave California because of the high prices of our housing, amongst other things, of course. They're leaving for family reasons. But our job prospects are high in California, so you see a lot of people that are moving in. They're moving because of their jobs. And what's great to see actually here is the age ranges of the people that are going in and out. So the younger people are moving in, the older people are moving out. They're moving out in droves. So what are the top markets that people are moving in and out of? The top inbound states were South Carolina with 64% inbound, Oregon 63% inbound, South Dakota 62% inbound, and Arizona with 62% inbound. The highest percentage of inbound migration was surprisingly Idaho. 70% of people are moving into Idaho and only 30% are moving out. Where are they moving out of? New York tops one of the highest on the list at 67%. Illinois, people are moving out of at 67% outbound migration. Connecticut, 63%. And California was on that list, rounding up the top five at 59%. The highest state for outbound migration was actually New Jersey. 70% of the people were leaving New Jersey as opposed to coming into New Jersey. All right, let's take a look at our mortgage rates. This is where I go to see and where a lot of the mortgage industry goes to see what's going on in the industry. As you can see here, our 30-year fixed in this last week has decreased by 0.01%. Our 15-year, surprisingly, has also increased by 1.01%. But the biggest jump was our FHA 30-year. We went from 2.28% now, as you can see, to 2.35%. Our jumbo increased from 3.27% to 3.35%. And our 5/1 ARM went the other way. It actually decreased from 2.44% to 2.3%. All right. Let's talk about the quote of the week. One of my favorite quotes by Teddy Roosevelt. Do what you can with what you have where you are today. Too many times we're waiting for things to line up, stars and moons to align. Try to do what you can with what you have today and make the most of your current situation. Today will not come again. All right. Remember, please, if you like this video, make sure you hit the like button down below so that I know to keep creating content and videos just like this. If you're in the market to buy or sell, please talk to me. I'm even in this crazy market. I just sold a house where I got my buyers $50,000 off of the list price because I know how to negotiate these things correctly. And if you're looking to sell, there's no better time than now. You see these numbers. Homes are selling in 9 days, and they're selling significantly above ask, especially if you market the home correctly. It's all about how you do it today, not just doing it. All right. Well, that's it. I want to wish you all a very good week. Thank you once again for sharing this time with me. This is Roman Shershare, your #1 online resource for buying property, and we're out.